Welcome, everyone, to another GoldSeek Nugget, a special presentation brought to you by GoldSeek.com Radio. This week's special guest, James Turk, author and manager of Gold Money. Today's featured guest, calling all the way from Spain, incidentally, because they're home hunting there. We wondered when you'd be moving to a warmer climate. It just didn't expect that it would be that much warmer.
Yeah, the climate here in the south of Spain is absolutely lovely, and we're looking forward to settling down here.
Jump right into these markets. We've seen some interesting developments. You mentioned that you were looking for 4-digit gold, and last week, well, we closed at the highest level, actually, in the bull market. Highest close on record with the yellow metal hovering around that 1,005 point. The greenback was just blistered. I haven't seen such a difficult period for the greenback in over a year now. You know, Goldman Sachs mentioning that they expect the dollar to make fresh new lows. Are you on board with those views?
I've been pretty much a broken record that the dollar is, heading for a collapse. In fact, that was the book that John Rubino and I wrote back in 2004, The Coming Collapse of the Dollar. And, if you look at where we are today, the dollar is still overvalued, and the chart of the dollar is absolutely horrific. It's the weakest looking chart out there. The dollar just does not bounce. And what's more worrying is that the momentum to the downside in the dollar is really building. Expect to see new lows in the dollar, meaning new lows in the dollar index within the next month or two.
Equities have had quite a dead cat bounce from their lows, up over 50%. The short sellers, they've just been wrong the whole way up. It looks as though we've gotten past the worst, at least as far as equities are concerned. Not even 9/11, the 8th anniversary of that tragic event, was enough to rattle the markets.
Well, what I think's happening, Chris? The economy is not, the stock market is not rising because the economy is doing well. The stock market is rising because the central bank is on the path towards hyperinflation. Earlier this year, I was saying that the dollar was heading for hyperinflation and that the writing would be on the wall by the end of this year, first quarter of the next year at the absolute latest. And the fact that the stock market is rising is a clear sign of a hyperinflationary path. If you look at hyperinflation where it's hit other countries around the world, people exit the local currency and buy whatever they can. And buying stocks is a good way to exit the local currency because you're basically owning assets. You're owning a wealth-producing franchise if you use the right stocks. So, I think we're on a hyperinflationary path, and that's why the stock market is rising.
The patient is in intensive care and the paddles are on his chest. Just because he's bouncing around on the table doesn't mean the economy is out of the woods. It just means that the Fed is administering high voltages of electricity.
That's exactly right. In fact, I don't think the economy is close to out of the woods and won't be until you see employment starting to climb again, rather than unemployment climbing. There are no signs of that happening in the immediate future.
Perfect segue into what I wanted to ask next. The unemployment situation, folks were expecting another decline or at least break even at around 9.5% unemployment. But instead, we're at 9.7%, the rate, that is, of unemployment. And it looks as though we're certainly going to head into double-digit territory in the new year. As long as unemployment is accelerating on the downside, or should I say on the upside, of course, where do you have this economic miracle that's going to save the jobs and save the housing market and jumpstart the economy? Back to your earlier thesis, the Fed has to keep printing money.
They are choosing to keep printing money because they want to bring the bubble and the boom times back, convince everyone that we're not in a bust. But the boom-bust cycle is alive and well. An intervention is not going to make the bust any worse. All they're going to do is prolong the agony. And if they end up hyperinflating the dollar, then the agony is going to get much, much worse because that's going to destroy what's going to be left of the economy.
Well, I think that's an interesting scenario, hyperinflation, because at the end of the day, when folks talk about runaway inflation, galloping inflation, we haven't seen anything like that since at least the Civil War. We just haven't seen that runaway inflation. If we were to break through that 70, 71 area on the U.S. dollar, there really isn't a lot of support anywhere until you drop to maybe the 50 area, and then, you're in new territory. Technically, do you think that we could enter uncharted waters sometime soon for the greenback?
Yeah, I do. In fact, we're in uncharted waters right now because for me, the important measure is not so much the dollar index. In other words, what the dollar is doing relative to other fiat paper currencies. But for me, the important measure is what the dollar is doing against gold. And, as we speak, gold's at $1,009. And if the breakout doesn't happen today, it looks like it's going to happen within the next few days or maybe next week at the latest. And once we start going above 1,000, my view has been we're just going to keep going because people are going to wake up that something is wrong with the dollar. And that's what the gold price is telling us.
I think what we probably need from a technical view is a consolidation above that 1,000-point area to convince folks that this is the real deal this time around.
I think we had the consolidation last week. The fact that it was so well bid when it went down into the 990s, to me, suggests that this thing's getting ready to go. The way I look at it is that in August or early September, when the gold price and silver price started rising, people were on vacation or they just weren't paying attention, and the train left the station. Now you got a lot of people standing there ready to buy the dips, and that's what we saw last week. Any of those guys becoming aggressive and you get the shorts starting to cover, I think you're just going to keep going higher. And that's why I'm watching very closely today and tomorrow, because I think we're that close to a breakout.